Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of June 6th through June 10th. And our weekly trading game plan part one for this week is titled A Good Defense is the Best Offense in Trading Too. So again, thank you for joining us for the live stream. Look forward to it. And please let me know if the volume and the visibility is okay. And we'll get started. So again, you can find the notes for our weekly trading game plans in our Google Drive. You can find the link to the Google Drive in the description box below. There's a folder called Trading Game Plans. You should have access to everything in that folder and be able to access these notes and reference them in the future. And it has links to many of the tools that we'll be using today. So we'll get started and look at the markets. So we'll start in the FinViz home. And we can see the markets closed down on Friday. It was pretty red. The FANG stocks got hit pretty hard. Tesla got hit pretty hard. We see the majority are below their 200 moving average, below their 50-day moving average, and we had more decliners. So, again, we're in a bear market. We've been saying for quite a while, and Friday was definitely a bear day. So welcome back, Spacula. Please let me know how the volume is. Thumbs up if the volume's good, if the visibility's good. So news-wise, we can see somebody says it's going to be up towards the end of the year. China stocks fail. Employment data, the strong employment data, and we'll talk about that data that came out on Friday. And we see oil's pushing back up. There was a little bit of a lull. There was discussion that OPEC might discount Russian oil from their caps, but they did not do that. We'll talk about what they did decide in a minute. Natural gas has been flirting with breaking over 9 again. And we see gold has been kind of hovering in the mid 1800s. Good morning, Tanvir. Thank you for joining us. Please let me know how the volumes and everything looks. And again, we can see the futures are pointing down. And then we see the treasuries push back up to the 3 range, not really inverted, very flat, but pushing back up to the 3 range, like we'll see in a minute in the futures. So that's kind of the outlook from Friday the 3rd. Get a red day. Let's look at the indices, see where we're sitting. So we see the SPY had tried to make a little bit of a run up. It's been oscillating. Back a couple weeks ago, we talked about the pit and the pendulum, and we're kind of in a pendulum right now, which is okay. We'll talk about ways we can adapt to that, ways we can play defense, ways we can make money with that oscillation. We zoom out to the weekly. Again, we see it's well below its 200-day moving average. It did try to run up and then kind of hit this peak. And then it's kind of dojing right now. So we'll look at the Qs. Maybe we'll look at the monthlies as well. All the indices look similar. They kind of tweezer bottom, made a little bit of a run up. Doji still well below their averages, still very descending, still bear market. Again, we want to be defensive and play this as a bear market. So in Dow, same kind of way. It bounced off the bottom a little bit, dojied again, still in a downtrend. Russell, IWM. Again, they're all looking pretty much the same. Look at the VIX. The VIX had started to settle down, then it popped up a little bit, and I think it's settling back down a bit again. So we see that short pop up on Friday. It had been retracing to its mean. We had a little bit of a pop on that down day on Friday, but again, it's still in a decline. Unless we have some kind of major catalyst, I don't expect it to really pop. We'll see where it's sitting right now. Right now, the VIX is sitting at 24.79, so it's below 25 at this point. So we kind of would expect it to continue to trail down at this point. So, and SPAC as do I trade IWM or just use it? There are some ETFs and they're in our list of ETFs that I don't trade the IWM directly, but there's a URTY, I believe, and an SRTY that you can long and short Russell 2000. So again, those are leveraged ETFs that I would use to trade IWM essentially, which is the Russell 2000. So it's been kind of the Russell IWM's been kind of in a middle. It's declining like all the others, but it's been kind of sitting in the middle. So I wouldn't short it here. In fact, none of these in terms of a swing, I wouldn't short them because again, they're kind of sitting in the middle of their range. On a daily basis, again, if you're a day trader scalper, you can use any of those leveraged ETFs, to trade the momentum. If it's going up on the day, you can use the long leveraged ETF to ride the momentum up, and then when it rolls over, you can use the short ETF to ride it back down. Again, the tendency right now is we're in a bear market, so if it starts to run up, be ready to flip over and ride it down. So I tend not to be that nimble, but if you are that nimble and you can ride those guys using leverage ETFs, I think there's a lot of money to be made. You just have to watch them and be nimble. So let's look at the groups, sectors from Friday. Again, we see the only one that was positive on Friday was energy, because again, oil and natural gas ran up, but we see the least negative were industrials and utilities and healthcare for the week. Quite a few green, energy, industrials, and then we saw consumer cyclicals. Technology had a little bit of a run, but again, the theme for the month has been energy, utilities, basic materials. So again, playing defense, those are the sectors that we would want to focus on, the ones that have momentum for the month. We're going to get some oscillations, some sector rotations from day to day, particularly in this choppy market. One day technology will be up, the next day it'll be down. So we see that. For the week it was up, but Friday it was one of the worst performers. So if we look at the industries, again, a lot of energy, shipping, biotech had some major acquisitions. Bristol Myers bought somebody out for like $4 billion or something. I think I mentioned in one of the videos or discussions I think we're going to see some of that in biotech. There's a number that are trading below cash. I think they're potentially buyout candidates, but guessing which one is difficult. That we can see for the week, again, energy, basic materials, copper, which really popped on Friday. Silver's run up a couple times. So again, basic materials and energy are your strong sectors right now. So let's talk about the economic data from this week. And again, I post this information. Let me bring up the Discord server, and then I can reference it while it loads. So I'll let that load a second. So Monday was Memorial Day. I hope you all had a good holiday. Hope you were able to enjoy family time, weather time, time out of the markets. And then Tuesday, see we had some housing data, a little bit weak. We've been talking about the rollover in housing for a while. We're seeing evidence of that. It is trickling down. We saw some PMI data. Inflation is still hot. We're going to see all this data. The indications are that inflation is still very hot. And you heard Biden come out, the Fed people come out. They're focused now on. Now they're talking about crushing inflation. So we talked about kill inflation now. Now they're talking about crushing inflation, and they're talking about really having to raise interest rates aggressively to stamp out demand because they can't fix the supply issue. So good morning, Walter. Glad to see you here. I don't recall having seen you before. If you're one of our new BeachBum traders, welcome to our community. Glad to have you. So then Wednesday, again, we got mortgages. Mortgages are running up, but applications are down. So again, the housing market is decreasing. Again, PMI data was pretty in line. Construction spending is down. So again, housing market's rolling over. Manufacturing orders are down. But the index, the inflationary index, is above expectations. So again, hot inflation. Then we see job openings. It was as expected. It was down some, but not significantly. And then we saw a down market on Wednesday as the strong factory data fans fears of aggressive rate hikes. So we see all this data is indicating aggressive rate hikes, and that also scared the market off on Friday. We'll see with the employment data. So again, still hot economy. So you can read these articles. I've copied those out so that we have those references and you can read in more detail out of the notes. So welcome, Johnny Trades. Thank you for joining us. Glad to have you back. I guess you're on traveling on vacation. Hope you had a good time. So Thursday we had the OPEC meeting, and I've got some notes down below from the OPEC meeting. Excuse me a sec. So then we got non-farm payrolls was below expectations. Continuing claims was a little below expectations, which was positive. New claims was below expectations, which was positive. Productivity is poor. It was not as bad as expected, but its productivity is still a major issue and poor. Factory orders is poor. Crude inventories were down much more than expected, and that was possibly one of the reasons for the increase in oil prices. And then here's the decision from OPEC is there was rumbling that they might remove Russia from consideration from their production caps, and they did not do so. They did decide to add an additional 216,000 barrels per day to their previous production increase rate. So they are increasing production at a higher rate now going forward. But they're still including Russia in their production cap, so Russia's still part of it, and they're allowing Russia to increase production by about 20,000 barrels per day. So it doesn't help a whole lot because the European Union is also putting further sanctions on Russian oil, so they can't accept Russian oil, so it has to come from the other OPEC countries. So again, there's a supply-demand imbalance, and so oil is still running up to the 120 range. It hasn't peaked back at 130 yet, but if it does, as we'll talk about the futures as well, we're looking at another opportunity to scalp a top on oil, as that has to be resolved somehow at some point. So Friday, we got the jobs data. So we see hourly earnings wasn't really much changed. The manufacturing payrolls was very disappointing, though. It was much lower than expectations. But non-farm payrolls was up. participation rate's pretty steady. And so the unemployment rate is pretty steady at 3.6. I hear discussions that they believe that, again, the Fed's going to have to raise interest rates pretty aggressively and allow unemployment to go up to like a 4% range to curb inflation. So, and then there's an article there. One of the things we're going to talk about is the hiring freezes and the layoffs. So on Friday, one of the negatives is Elon Musk came out and said he feels super bad about the economy. So that tells you something. And based on that, they initiated a hiring freeze, and they're cutting 10% of their workforce. So we're going to talk about the cascading effect of these types of hiring freezes and layoffs, and how we can play defense against that kind of activity, because this is going to have a cascading effect. They're auto producer. I know they're sold as a technology company, and they also have solar, etc. So there's a number of suppliers that then feed into their businesses, and if they're seeing a business slowdown that they have to cut costs, then the people that they're buying from are also going to see a slowdown. So that's the cascading effect, and we've seen this in 2008, we've seen it in 2000, and eventually that's going to lead us into a recession. So how severe, how long, how deep, we don't know. But again, that's why we want to talk about playing defense. So, and then we also had services PMI. Again, all this shows the inflation's still hot, but the economy overall is weakening. So let's look at the calendar for next week, see what are the important dates. And again, you can find these links. They're in the notes. They're on our web page. And again, we put this data in the Surf the Markets channel on our page, or in our Discord, I mean. So as this data comes out, based on Douglas's request, Douglas PC's request, I've started snipping the graphic out of the economic calendar from investing.com, as well as just the raw data. So you guys can tell me if you like both of them, if you just want the graphics. I do like the color coding, so you can see the better than expectations, worse than expectations. So again, keep an eye on the Surf the Markets report channel in our Discord for real-time updates to that data. And welcome DS Lives, glad to see you here. So let's see what we've got for next week's economic calendar. Looks pretty standard for Monday, Tuesday. Mortgage data on Wednesday. So again, more housing. We expect that to be kind of weak. Wholesale trade, oil inventories. Looks pretty standard. Again, Thursday, we get jobless data. So they're expecting continuing to go up a little bit, initial to go up a little bit. So they're kind of saying the unemployment's going to go up a little bit. Core CPI is going to be very important on Friday. That's the core data that the Fed looks at. They're expecting it to go down. If it does not go down, that's going to be further indication that inflation is not reducing, and that's going to be a trigger for fear that the Fed's going to have to really be aggressive. So watch out on Friday for that CPI data. That's going to be very important. And we've got sentiment data. The last sentiment reading was quite poor. If it continues to decline and the consumer is more negative, that's going to be bad for the outlook on the economy. So again, Friday looks like it's going to be the really important. Thursday, Friday are going to be the important days for economic data. And again, keep an eye on the Surf the Market Reports channel in our Discord. I'll post this data out as it comes out, so I hope that helps. So earnings, also in the Surf the Market Reports channel, I've started putting the graphic from that I get from Benzinga, and you can see also the link for Benzinga Pro in the description box below if you're interested in using Benzinga Pro. And again, then we can see the graphic for the earnings, upcoming earnings. Again, keep an eye on the earnings. Right now, again, we're in a bear market, so any excuse, if somebody misses earnings, if they have poor guidance, anything, it will also give us an indication of what segments of the economy are being hurt the most by inflation, or being hurt the most by supply chain issues, or Russia. So listening to these earnings is important, and looking for sympathy plays, who else is it going to impact? So Tanvir Amazon put options. Does that affect the puts? Yeah, because in fact, they're probably going to cancel them. Typically, and you'll see I posted a response in the Discord, when they do a stock split, reverse split, they have a tendency to cancel the options, or they may put it in another option that's essentially the old pre-split option, and then create a new set of options post-split. So keep an eye, make sure they don't cancel your option if you want to hold it. So yeah, keep an eye on it post-split. And you may have to reinitiate it, or like I said, you might get stuck with a pre-split option, and then they'll have post-split options. So, cool. Okay. So yeah, keep an eye on the earnings calendar. Okay, now let's look at markets data in Webull. Again, right now, with their 4th birthday, you can still get 6 free stocks when you open and fund an account in Webull. You can find the link in our description box below. Again, this is a special for their 4th birthday, and you can get 6 free stocks. The first 2 up to $300 each, and then depositing any amount, even $1, you get 4 more free stocks, each of which can be valued up to $3,000. So Webull is our favorite trading platform. Again, you can find the link in the description box below, and if you use the link, you can get 6 free stocks if you're not already using Webull. So we'll look at the market screen. I've got it on the global tab, I guess. We can see Asia was somewhat green as it closed. Everybody else was red. So while that guy loads up, I'm going to jump over to the futures. I'll come back. Get that guy loading. I'm going to reload that guy, and we'll look at the futures while he reloads. So we can see this choppy action that I was talking about. The markets this week are acting like they're range bound, which again, as a swing trader, as a scalper, I don't mind that at all, because I could play these swings very nicely. You'll see tomorrow, if you come back for part 2, we made a real nice profit on BTI in this chop when we caught it when it ran up. And then when it chopped us out, we made a nice profit, but it'll come back down. We'll get back in. And again, if you're a day trader scalper, you can make a lot of money on this chop. So if it stays range bound over the summer, I'm okay with that. Again, as a swing trader, scalper, etc., there's money to be made. We just want to be careful if it eventually breaks down. We want to have our defenses in place. So we see the VIX is kind of retracing, and then it popped up a little on Friday. We see oil's running up. We're waiting for it to peak up above or at or above 130. If it does, we'll add a short position using drip. The pair we tend to play, if you want a short, you can use drip or SCO. If you want a long, you can use gush or UCO. See, natural gas has been real choppy. It hasn't broken back up above that 9. If it does, we'll try to scalp it again using cold, KOLD. If you want to try to long natural gas, you can use boil. We see gold's been kind of flat, choppy too. Silver as well. There's been some days when it's popped a little bit, but then it just hasn't gone anywhere. We see this huge pop in copper. If you want a long copper, there's an ETF called COPX. I do not know when to short copper, or that would have been an opportunity right there on that excessive pop. And we see platinum. I was looking at palladium. It's still relatively high. I do have a ETF to long palladium, but again, it's still relatively high. And again, although lumber looks like it's low, there's a couple ETFs you could look at, cut and wood, but it's still relatively high. So, and we see the treasuries finally did break down as we expected. Now the Fed has begun their quantitative tightening, where they're now starting as of June. They're starting to sell off both mortgage-backed securities and treasuries, as well as let them roll off their balance sheet. I do have a note. I want to look for potential long, an ETF to long, these very short-term treasuries. I haven't had time to look that up yet. I do have one for 7 to 10 years, but these very short guys might be an opportunity because you see the precipitous drop it made. There may be an opportunity here. So I'll be looking for something in those areas. If anybody knows of an ETF to long these 2-year note treasuries, that would be great. Please let me know. So and then we see the dollar had weakened a little bit and then it got a little stronger and it chopped a bit. That hit some of the basic materials, I think on Thursday a little bit. Okay, so now we're back to the market screen in Webull. We see a lot of decliners, but the percentage was very low, almost not quite 2 to 1. Heavy outflow out of the NASDAQ, pretty flat out of NYSE. Again, you can also see earnings calendar in Webull here for the near term, so that's helpful. And let's look at the best performing industries for the week. Since Friday was pretty weak, if we look at them for the whole week, we might get a better view. So renewable energy was positive, real estate positive, heavy machine trains, transports positive, containers, energy obviously. So for the week, there's quite a few utilities, quite a few positive sectors for the week, even though Friday was relatively negative. Quantitative easing, how do options play and capitalize? A lot of these treasury ETFs are optionable. So if you look at like TLT, and then there's the ones we look at, which are like TMF, TMV, I believe, are optionable. So you can play options on the treasury ETFs as well. So does that help, Tanvir? Although you can just buy the ETFs, and there are long and short ETFs that you could swing. That's how we swing the treasuries. So I tend to do that more than options. And if you all come back tomorrow, we'll talk about what we're putting on our watch list for this week. So, okay, so hotels and entertainment, we're a little positive on this week. I'll look at these ETFs. So short Dow, gold miners positive, FANG was positive, SOX, so that's the short on semiconductors. And yeah, that pair, the SOXL, SOXS, is another good scalping pair right now. It has tended to flip from day to day. So yeah, if you're day trading, scalping that pair, SOXL, SOXS, SOXL is the long, SOXS is the short. See short on the Qs. Biotech that's an interesting one, and then another one we've talked about is yen, YINN, to long Chinese tech stocks, and yang to short Chinese tech stocks. Another great scalping pair right now. We're watching both of them to see which one we're going to have a good swing opportunity in. Okay, industries mostly negative other than energy, basic materials. Commodities, softs, cotton, energies positive, softs positive. Yeah, energy. So commodities in general, basic materials, energy, commodities are generally positive. So there's a 0 to 1 year treasury long, it looks like. I'll have to take a look at that one. And US dollar bullish. So it looks like they're betting the dollar's going to go back up. So there's our data for the week. Very quickly talk about some strategies, and I'll take some further um, questions. So quantitative easing, okay, Tanabir, we're talking, they're tightening. The Fed is quantitative tightening, or what they call QT. Quantitative easing would be if they were buying bonds and pumping money into, they've been talking about the money printer, that the Fed's been printing money. Well, now they're selling their bonds, or they're letting bonds roll off their balance sheet. When they do QE, or quantitative easing, they're printing money, they're buying bonds in the market and increasing their balance sheet. Now they're decreasing their balance sheet, and they're actually going to sell bonds. So that's going to drive bond prices down, right? Because the supply of bonds is higher than the demand, which means the yields are going to have to go up to get people to buy them. So bond prices, so the price is going to go down, yield's going to go up. And we're kind of waiting for them to finish that until then. Once the bonds bottom, then we may look at longing bonds with TLT, etc. So, okay, so let's talk about some defensive strategies. Again, the topic for this week is, be defensive, and here's some ideas I have. I'd love to hear your ideas as well about some defensive strategies. A lot of these we've talked about before, so I'll just kind of reference them and reiterate them. But one, is nimbly adapting to market conditions. Last week, our topic was adapt or die, and really it was how to adapt to current market conditions so you don't get blown out of the market. You don't blow up your account. You can stay in and trade. The key is being adaptive. And we saw how choppy the market was this week. Again, if you're adaptive, if it's up day, you long. You play the momentum. If it's a down day, you short. Play the downward momentum. Now, again, we're in a bear market. So, again, sell the rips and bear market. Until we see a strong change that we're not in a bear market, your mindset should be sell the rips. We're in a downtrend, sell the rips. If you want to short and put a stop in, Now, these rallies in a bear market can be pretty violent, right? Pretty rapid increase, pretty violent uptrend. So if you're trying to short, you probably be advisable to have a stop so you don't get really tore up when you get one of these violent updrafts. Um, so again, a defensive strategy is using stops. Again, when you have a profit on an uptrend, you're probably going to want to, cover, be defensive, put a stop in, protect your loss or protect your profit. Again, we have another video about how to use stops in both Webull and E-Trade, and I'll try to remember to add that in a comment below of how to use stops to protect your profits. So yeah, protect your profits. Um, Protect yourself if you're going to short. Don't get blown out because of one of these bull bull rips in a bear market. Another strategy is using covered calls. If you're trying to hold something for a longer term and it declines and it's at a loss and you want to hold on to it, you can be, defensive. You could still make money. It could be a dividend stock. You could be collecting the dividends while you're holding it, even if it's underwater. And another way is to sell covered calls while you're waiting for the market to recover, waiting for your stock to recover. And here's a couple videos we have about how to sell covered calls. Yep, SPAC, sell the rips in a bear market. Yep. And okay, so lastly, we've talked about inflation and recession proofing your portfolio for a couple weeks, and I'm continuing to build out that list. Again, we'll probably do standalones, and we've talked about all these before, so I'm not going to go over those again this week, but for reference or in the notes, the ones I wanted to highlight for this week are some new ones. And I like this from one of Jim Cramer's recent shows, as he pointed out to avoid companies that are losing money, and I've been saying that for quite some time. Is unprofitable companies. We're headed into a recession. Um, People are going to shy away. It's risk off, so they're going to shy away from companies that are unprofitable, and they're going to put their money in more defensive companies that are making money, particularly paying dividends, relatively stable, etc. So, avoid companies that are losing money. And that means your typical biotechs. They are almost all losing money, so they're riskier. So being defensive, don't lose money. I almost put that quote in the thumbnail or description for this week. One of my favorite Warren Buffett quotes is Warren Buffett's top 2 rules of trading. Rule number 1, don't lose money. Rule number 2 is always remember rule number 1, which is don't lose money. So I'll probably use that one in a future title. So another one is avoid companies that are too expensive. A lot of these high growth, high tech companies that ran so high during the pandemic, they're just really expensive. They have a very high PE, and you've seen they've been just absolutely crushed. So I like to load up on Amazon, Google, NVIDIA, and Tesla. Yeah, those are good shopping lists, guys. Again, watch their valuation. You can see in our due diligence videos, you can use ChartMill, you can use FinViz, you can use Seeking Alpha. Look at those tools and see how their valuation is. And once they get to an attractive valuation, I agree. Those are good companies in general. The question is, are they a good buy right now? So trading below cash. Yep. Yeah. I do have, you can look, yeah, there's a cash per share. And if I have a query in my database that returns those that are trading below cash, and I look at that on almost a daily basis. Now, most of them right now are biotechs. So not only do you want to know that they're trading below cash, the question then is what's their cash burn rate? So how long are they going to be below cash, or are they still going to run out? but those are your acquisition candidates, right? If they're trading below cash, somebody can buy the company for less than what their cash pile is worth right now. So, yeah, I keep an eye. I have always looked for ones that are below cash. So the other thing I wanted to talk about very quickly, and then I'll try to wrap up, is we talked about the cascading effect. As you hear of these companies that are laying off, they're saying their sales are going to slow, etc. I want to start thinking and talking about this cascading effect as we go into a recession. Is think about, okay, if that company is laying off or their sales are slowing, who supplies them? Because that then cascades to those companies. Because if a good part of their sales comes from this manufacturer, whatever, then they're going to see slower sales. They're going to turn around and they're going to do a hiring freeze. They're going to start laying off, and then that cascades down the supply chain. And that's what we see going into a recession is this cascading effect. The other thing to watch out for is companies that are reliant on the discretionary spending from those workers that were just laid off. Um, so, for example, Tesla's going to lay off 10% of their workers. Where are their workers? They're in California, they're in Texas, etc. Well, where did they typically spend their money? Well, they're tech workers, so they probably bought iPhones and things like that. Well, if they just lost their job, are they going to buy a new iPhone? Well, maybe not. So those are the types of things you want to start thinking about is what is the downstream impact of these layoffs, freezes, slowing sales, and what companies do you want to avoid based on that? Now, which ones are good ones? Well, consumer necessities, food, gas, or energy's doing real well because people have to drive, they have to buy food, they have to buy your basic paper products, etc. Now they may trade down, and that's part of our discussion up here. Is they might not buy the top brand or the luxury brand, they might buy the generic brand or the store brand. So your discount retailers, etc., your Dollar Trees, Big Lots, BJ's, Costco's, etc., are probably going to benefit, and your mid-tier are going to probably suffer. So those are my thoughts right now on those topics. Um, Love to hear your feedback in the Discord and the comments. Do you have any other defensive ways you could be defensive? So and still make money in these markets. Do you have any ideas for inflation proofing or recession proofing your portfolio? Love to hear. Join us in the Discord. Um, Contact us via social media, etc. And please let us know what you think. Uh, we hope you all will come back tomorrow. And again, we'll use all of this information to create and update our watch lists for the trading week of June 6th through June 10th. And we'll apply these strategies to see what stocks we might want to buy or what we might want to short. So does anybody have any last minute questions? And again, I hope you'll come back for part 2 tomorrow. Otherwise, I'll wrap it up. Is lots. I would have to look at that. I would encourage you to put that in the Discord, or we could talk about it tomorrow and look at that specifically. I'm assuming that's not Big Lots because Big Lots, the ticker is BIG, big. And we have that on our watch list right now. So we'll look at it again tomorrow. So thank you all again. I appreciate you joining us in the chat for the live stream. And again, let us know your thoughts, comments, Discord discussion. Please share this with your friends. We really want to build up our community, our Discord, our trading community for everyone's mutual benefit. So the more the merrier. So thanks again. And y'all have a great day.